It's a strange thing that I had to retire to make real money. That is just a strange. Being a clinical psychologist was okay, but I was not making money like I'm making now. When you're treating patients, you really don't want to be making a lot of money because you're trying to help the people and you don't want to add to their financial burdens. And so there was kind of a conflict there. And I always was trying to use a sliding scale and be reasonable with people. With stocks, it's completely objective. Hey everyone, we want to look at three major effects on stocks this week and how that's going to lead to a stock market rally, a continued bull market rally, or is it a trap? Is it going to peter out because it doesn't have enough force behind it? The first of these factors is Jerome Powell's remarks about interest rates during Wednesday, November 1st meeting, during the interview, and the way he acted.
It's the way you act. It's the way you act.
The second one is Apple's earnings on November 2nd. The third one is how jobs numbers came out on Friday, November 3rd. The non-farm payroll. Is that over 200,000? If it is, it puts pressure on the Fed to consider raising rates again. I found the reaction on November 1st, Wednesday, to Jerome Powell to be very curious. He said all the right things that you would consider to be hawkish. He said that they're not considering cutting rates anytime in the future. In fact, they're not even thinking about cutting rates. So that was off the table as far as if you just listen to the words he was speaking. Yet he kept getting pressure to make some kind of statement about what was on his mind. And the things that led Wall Street to conclude that he was pivoting, that it was a solid pause, and that he was just going through the motions and making the right statements, but his heart wasn't really in it. It was saying things like, those dot plots that predict whether we're going to increase or decrease rates in the past. You don't want to pay too much attention to those because that just indicates what we're thinking at the moment, and it is not a set plan for what's going to happen in the future. In fact, he more or less said they had no plan. They are completely data dependent. They don't know what's going to happen. I think what's going on in his mind, I think he is very scared that something is going to break, that he feels that we have reached the point where things are restrictive enough. In fact, he kept emphasizing how much they had accomplished so far, how much work they had done, and how it was sufficiently, probably, restrictive enough. I think that's what Wall Street was keying on. In other words, he would have to see major increase in inflation for him to do another rate increase. Now, if he does a rate increase, I think it's going to happen in December or never. I think the reason for that is as you get into 2024, it will be increasingly hard for him to raise the interest rates because it's an election year, and that can affect their thinking. They're supposed to be completely independent, and I think that they mostly are, but they are human and can be affected by pressure to some extent. So he hinted that he wanted to keep rates the same, if at all possible. Wall Street took that hint as a solid promise that he wasn't going to do it, that he was just going through the motions, and he didn't really mean it, that he wants to pause, if at all possible, unless he gets major evidence to the upside on inflation. It was all Wall Street trying to divine what's going on in his mind, and I think he is terrified that things could break. They are at the point where they don't want to add the straw that breaks the camel's back, so to speak. It is ironic that the net effect of that interview with Jerome Powell on Wednesday set the stock market flying upwards like a rocket. They saw the coast is clear and man, he's going to pause and we're done with rate increases, and they start talking about rate cuts. At no point he kept saying we're not even considering rate cuts, but that did prevent them from anticipating that that's indeed what would happen. The ironic thing is that by being the way he is and being terrified is that he loosened financial conditions. The interest rates on the 10-year, the 20 and the 30-year all went down by almost like 20 basis points. So it had a major effect, and the market just flew forward on Wednesday and Thursday. We got to see if this is going to continue. On Thursday, November 2nd, Apple cast a dark cloud over the market in the after hours. It's because of concerns of their sales in China. Their sales of the Mac and the iPad and in their wearables all decreased in China. Tim Cook tried to say, well, our iPhone sales are strong, but the iPhone sales in comparison to the iPhone 14, the new one is the iPhone 15, the iPhone 15 in comparison to the iPhone 14 are not overwhelming. And they're concerned about competition from Huawei. The Chinese government has forbidden government workers to have Apple phones. They say it's for security reasons, and they favor people having the local company, which is Huawei. And Apple has lost 1% market share in China, while Huawei has gained 4% market share. There's lots of concern with that. And also, Apple just barely beat expectations. It wasn't an outstanding numbers, either on revenue or on earnings. When they compared this third quarter 2023, to the third quarter 2022, they were very underwhelmed. Apple had major problems in 2022, the third quarter, because Foxconn, which supplies much of the materials they need to make their devices, was having trouble supplying what Apple needed. And so it should be an easy comparison when you're comparing this third quarter to a troublesome quarter in 2022. It didn't compare very well. Apple did not save the market. In fact, it could put a stop to this rally, or at least temper it down. And now the pressure is on, and people were waiting for the job numbers on Friday to see how this is going to come out, because we got one factor going positive with the reaction to Jerome Powell's speech and interview, and then we got Apple casting a dark cloud over the market. So the tension was all set up for Friday. Friday, the non-farm payrolls came in. 180,000 jobs were expected to be added, and only 150,000 were added. Furthermore, the unemployment rate increased from 3.8% to 3.9%. This isn't a good report. This is a perfect report. We wanted the number of jobs to come down somewhat, but not too much, because that would indicate a recession. This looks like the mythical soft landing. It looks like we could be avoiding a crash. I think the bonds have responded, where the interest rates on the long end are going down, or are going to stay down. I recently bought about over $1 million of treasuries, and I bought about a 1-year duration because that was the highest interest rate, and I wanted to preserve in case he accidentally does cut at some point within the next year, that I would preserve this higher interest rate for part of my portfolio. I try to balance it somewhat. I've gotten away from real estate. I want to get away from real estate for a while. I don't see it as a negative thing to own, but it's very difficult to own when people cannot really sell their houses and buy another house unless they want to pay an 8% mortgage rate. And it's so unfair to the current generation, which needs to buy houses. I think it's a good investment. Hey, you got to live somewhere. And I didn't like giving rent away for free. It's much better to be a landlord than to be a renter. That is for sure nowadays. I also bought some Novo Nordisk, whose symbol is NVO. The studies are just outstanding. The earnings report was very positive, and it will only get more positive. They're going to gradually increase the amount of these appetite suppressants, the Ozempic and Wegovy. that they produced is not going to be shooting up and then shooting down sort of situation. It's going to be they're going to gradually increase it, and there's heavy demand. They cannot meet all the demand there is. The surprise was that I think they made more money on Wegovy, that's Wegovy, than they did on Ozempic, Ozempic. Ozempic is approved for type 1 diabetes by the FDA, and Wegovy is approved for weight loss. It's my impression, I don't know this for a fact yet, but I think Wegovy is significantly cheaper. If you don't have insurance coverage, it's a once a week self-administration that you do weekly, and people that keep on Wegovy continue to lose weight. My thought with these is that it would be a good way to start losing weight if you've had trouble losing weight, and then to simultaneously do diet and exercise options so that you make that part of your life too, because they recommend that you do the diet and exercise in addition to the appetite suppressants. So it's a good way to get yourself kick-started if you've had trouble losing weight. But even like with bariatric surgery, you have to maintain a diet to a certain extent. It doesn't just take over. You can overcome the bariatric surgery by not eating right. I bought some Novo Nordisk. It's a buy and hold, which I haven't been able to do for a long time. I'm going to stick with trading TQQQQ. I always put too many Q's in there, but I'm going to go with TQQQ, which is a triple leverage bullish fund on the QQQ, which is the 100 largest companies on the NASDAQ. I really hate shorting. I hate using SQQQ. I cry all the way to the bank during a bear market, but I'm so much happier to be doing this on the bullish side. And I go with the trend. I can make money going up and can make money going down. TQQQ and SQQQ are my favorites. We finally are in a position where I'm seriously considering buying QQQ and holding it long term. And hey, if you're in your 20s and 30s and 40s, it's a good investment. You're going to come out on the high side when the day is done. I love Novo Nordisk. I love what it's doing for people. I love what it's doing for people's health. And if I can make money doing that, that feels so much better than buying SQQQ, which I've made a lot of money on. I'm happy to say goodbye to it because in the long run, you'll make way more money trading the TQQQ and the QQQ than you will with the SQQQ. The SQQQ eventually goes to zero if you look at the chart over the long term. The TQQQ, it continues to go up. So if you make a mistake with TQQQ, it's much more forgiving. You will eventually come out of it, probably, if you can hang on to it. So that's the way I roll. Thank you, and I will see you in the next one.